And it is time for Building Rural Wealth this morning. Kaleb Roebuck with us. Kaleb, good morning to you.
Hey, good morning, Aaron.
Ashleigh Franco with us. Ashleigh, how was your weekend?
It was really good.
Financial blind spots. I've set this up for me, Kaleb. What are we going to talk about here?
Yeah, we all have blind spots, whether it's, when you're driving, but a lot of us, especially in our financial lives, do have blind spots. And whether you're somebody that, like us, that is up on it, does this stuff creeps up on you, or, if you're somebody that, really doesn't, you might have a lot more blind spots. But, today we want to just talk about, what are some of those common ones, even if, people are looking at it, there's always stuff you can look at and improve, but also, you need to do a little bit of reflection. So what are they, and how do you manage through some of those?
Okay. So, Ashleigh, what's a financial blind spot? Let's start there.
Yeah. Well, what's tricky about a blind spot is, by definition, you don't see them. And usually it's not what you like to focus on anyway, so you turn kind of your head sideways. And that can be either habits, assumptions, quietly working against you. So, kind of that example again, driving your car, your mirror, you kind of know what's back there, but unless you see it or watching it beforehand, when that car passes you, you don't know.
Mm-hmm.
So, money kind of works the exact same way. It'll sneak up on you, and sometimes will get you at the worst possible moment. Sometimes that's like a subscription you forgot about. Netflix is notorious for that, those annual ones. Or maybe it's putting too much faith in one investment just because it's familiar. And key thing is, no one's immune, and it feels normal, but over time, those blind spots can really add up. It's kind of like a cracked foundation in a house. The house outside looks beautiful, looks solid, but that crack is hiding that weakness, which will compound over time.
Okay, very good. What about investing blind spots, Kaleb? Some of the common investing blind spots are what? What do we need to be thinking about there?
Yeah, and there's a lot of them. They kind of touch on different areas, and like Ashley said, it's the ones that you don't think about because you don't see, but it might be something that is along with what you're doing. And the first one is overconfidence in investment knowledge, which seems counterintuitive, but hey, having a lot of knowledge and investing knowledge is good, but sometimes you get overconfident in that, and you think hey, I can always pick winners. In a good strong market when everybody's making money, you might think that's because of your own genius or not, which again maybe it is, but from an investing standpoint that's super hard to suss out. And what that creates is basically riskier portfolios as it goes on, or concentrated positions. You start really loading up on an individual stock or leverage funds or things like that. So what you try to do is keep that disciplined approach, keep your process by being diversified and having that approach every time, or knowing how to scale that. Don't get overconfidence in that knowledge. Kind of along with that, number two would be chasing past performance. Well, this stock did really well, or this fund did well, so I'm going to continue to kind of layer on or add to that, kind of increasing your position size. When in reality, we know past performance, doesn't indicate future results. But again, that's hard.
Yeah.
But again, at the same time, some of these companies have, performed well over years and years and years too. So again, kind of how do you balance that? Again, if it's a blind spot, most of your blind spots, you just need to be aware of them. Doesn't mean you make that turn or not. You kind of just need to know that car's there. The third one would be anchoring, getting stuck on one number, and this could be in many ways. For some people, that could be, hey, I got a retirement number of, I got to hit X amount before I can retire.
Right.
It might be the price that you paid for a stock. It might be the price you sold one for. It could be, a certain day of retirement or an age or something too. So, sometimes that can be a blind spot, not being flexible. We're talking about numbers, assumptions, variables, life, so whether it's the stock market number or your life variable, you need to be, flexible and try not to anchor with that. And an example would be like in April from an investing perspective. If you sold in April, at the April lows, you're anchored to that price that you sold out. Yeah. And unfortunately, you hadn't really got a better choice to get back in. And you probably haven't yet. Or, most people, if they sold, haven't. A lot of it shows. But because they've anchored to that price of where it is. So again, that can be good and bad in certain ways, but you need to know that blind spot. Fourth one is herd mentality, buying and selling just because everyone else is right along there. When March and April happened, there was a quick sell-off.
Everybody's selling. Everybody's selling.
Yeah. Quote unquote, everybody.
Yeah.
Which was very severe, very sharp. But again, that returned quickly. So again, you anchor, you herd mentality. Again, sometimes that can lead to, that buying low or buying high, selling low, or just that emotional response. The fifth one is ignoring fees and costs and taxes. Blind spots, not realizing some of those small percentages, whether it's on fees or taxes, can have a huge impact, over time. And they can be significant, and saving money along with that, saving money in the right type of account, being efficient, with your money and stuff too. So those are all blind spots that, most people, they may be somewhat aware of, but not know. But if you can focus on it, that's how you clean some of those up, or just know. And they kind of develop over time too.
All right. So when these come up, Kaleb, what do you tend to notice when you're working with your clients? What do you see?
Yeah, most people obviously aren't aware of them at first because it's kind of alongside something they're doing. Again, hey, if somebody's been a good, strong, aggressive investor, that's a good thing. But maybe then they become too concentrated in the tech sector or something like that, as an example. But on the flip side, I've seen people worried about every little expense when the real blind spot is not planning ahead for healthcare and stuff too. So even folks, that have assets or that have a plan can still have blind spots, but it's at different areas, and it's not always what we think too. A lot of times, just by sitting to talk with clients, that's kind of how you figure it out, or they'll kind of tell you. And again, it's not with everybody that's just bad with money either. Again, we're in the business, talked about this all the day. We all have blind spots. Me and Ashleigh have missed things. I've told the story to a couple clients, maybe even on here, where tax withholding. We talk about taxes all the time. Well, I had never updated my tax withholding from when I got married, so I was still holding at the wrong rate. Kind of a blind spot there. But again, it's when you do those reviews, when you check in on that stuff, and once you've found that, you feel more confident about it. You know what to look out for for the next time, and you kind of do learn from it. But then that blind spot kind of shifts. But you got to ask yourself, what works and how do I do that?
Okay, let's talk about some of these things that we've talked about and we're looking at. Ashleigh, bring me up to date here.
Yeah, so kind of things just to reflect on, because like Kaleb said, it's all you don't know what you don't know. So kind of taking the time to sit down, think about, hey, what maybe am I missing? Because not all financial blind spots are created equal. Some are a lot bigger, some are a lot smaller. So taking that time to self-reflect, whether that's, hey, what's one blind spot you've noticed in your own finances? Where do you feel most confident? And then where do you feel less certain? And then maybe dig into those uncertainties. No one likes doing things we don't feel competent in, but that's usually where the most growth and opportunities are for development as well. So whether you're curious about identifying your own blind spots, consider like a financial checklist. Sometimes it's easy to just run down a list once a year. Hey, do I got all these main topics handled? Or just a conversation, because things can come up that you never thought about, and you're not going to think about them because it's never been in your mind before.
Yeah, right.
And key thing is, a lot of people will, with financial blind spots, is, oh, I got this covered, it's all good, but kind of analogy is that you're wearing a seatbelt, but you forget to check your brakes. Well, that's great, you're wearing your seatbelt. That is really safe. But if your brakes don't work, it's not going to go well.